What is up, everyone? I hope you're all doing well here. Welcome. The screen, the camera on the other screen. That's why I'm faced this way sometimes. But, anyways, hope you're all doing well. Today is October 10th, right, 2023. And we talked a little about this yesterday, but I don't really want to dive into it too much on today's session either, right? Talking about the escalated tensions and straight up like breakout of war in the Middle East, right, between Israel and Palestine right now. Hamas attacking or initiating this current concept of the war between the nations, right? They declared state of war, so on and so forth. Now, again, I'm not an expert in Middle Eastern politics. I'm not an expert in the Gaza Strip or any of that, right? So it's not necessarily my place to be talking about this, which means that I won't be. But we do have to acknowledge and understand what is occurring right now, and it is making headlines realistically. One of the aspects about this is that, yeah, okay, markets gapped lower, but a lot of the market's sentiment still stuck to the bullish side because there's no immediate effect to the U.S. or the channels that the U.S. does possess in this instance. So one of the main things that did pop up realistically is we had a massive surge in defense stocks, not defensive, defense stocks, including Lockheed Martin, right, and many others, right, RTX, GD, so on and so forth. The list does go on. So generally, the top 5 gainers of the S&P were all related to something like that, right? We have NOC, right, North Corp, Grumman. We have L3 Harris, LHX, and then we have Huntington, HII, of course, Lockheed Martin and GD, the top 5 that finished on the sector. So the interesting aspect about this is that obviously, yes, those are going to do pretty well in these current standings, in these current conditions, in this political sphere. But the interesting aspect about this is actually that government officials, Congress officials were long these 2 weeks ago. Leave it at that, but do what you will with that information. So the USS Gerald Ford aircraft carrier, also and accompanying war vessels, have been sent to the Eastern Mediterranean, with the U.S. indicating it was prepared to come to Israel's defense and protect its interest in the region. Elsewhere, WTI, right, parred its big gains following a knee-jerk surge reaction, but still remains pretty elevated, right? I think it's around $86 a barrel. While the U.S. stock index did turn higher, and Treasuries had their best day since March following the latest policy remarks from the Federal Reserve. Now, keep in mind, quote unquote, the bond market was closed yesterday in observance of Columbus Day and a bank holiday. So we haven't necessarily seen the strength and volume in this market latest move, right? I think that bonds and equities are falsely on the upside based on this recent surge on lower volume, right? It's something that I'm very, very cautious of on today's session, right? I think that generally we have experienced some kind of bottoming in the market for the remainder of the year. Doesn't mean we can't go retest those bottoms, but I am a little skeptical based on current volume that actually propelled a lot of this upside, right? So with that, we're going to have to obviously keep an eye on the news because some escalations and whatnot can have larger effects in the market, also the political sphere. So it is important to watch that currently as this unfolds. But one of the things is why bullish on this, right? Why bullish yesterday? This is what I was talking about when this was breaking out. While the whole world and a lot of like Twitter self-proclaimed Middle Eastern politicians, apparently, right, experts in a field that they have no right being in. But anyways, the logical aspect behind it, right, like the immediate effect on the U.S. markets is very limited right now. So it turns into a fake sell, allowing for dip buyers to step in, right? Especially considering what the seasonality and what the current construct of this market is. We have a long motion, which a lot of people saw this as a great opportunity to actually buy into this dip, right? There's not really too much else behind that, right? Logically speaking, order flow and the buy accumulation had been present, right, over the past few days here. So they looked at it as an as an opportunity to actually get in on that side to see that continued move. Now, It was a very similar situation as what happened with Ukraine, right? When Russia attacked Ukraine, we had a 2%, I believe, again, don't quote me on the exact figure, but I believe it was 2% to the downside pre-market, followed by a 3 to 4% rally intraday. So we actually closed the session green on a massive pop from that announcement. So it's a very similar concept as to what we have now. Another aspect, right? We have more strikes from the auto workers, right? The United Auto Workers said that employees at Mack Trucks, owned by Volvo, have gone on strike after rejecting proposed 5-year labor contracts. Nearly 4,000 union workers at Mack Trucks facilities walked out, bringing the total number of United Auto Workers members on strike to over 30,000 in Canada, right? GM, General Motors workers also staged a walkout after failing to agree a contract. And the Unifor members last month voted to clear Ford's new contract, and Tesla, which has been immune to the U.S. strikes, is now facing employee heat in Germany, while the U.S. jobs data did not reflect the United Auto Workers strikers' impact, right? So we'll see the full effects realistically probably later in this quarter, November, December, right? So those didn't necessarily influence what we had going on in that jobs number that came out last week, which is important because a significant decrease in that, right, gets back to slightly looser labor market, which is necessarily bullish in the current market conditions, right, so to speak, because that was one of the Fed's main concerns, right, the tight labor market. So another aspect to the news that we saw coming out of the EU, my fellow Euro pores, the European Commission is seeking information as to whether a group of Microsoft's Service and Apple's iMessage messaging systems could comply with the continent's Digital Markets Act. Right, questionnaires were sent out earlier this month to rate the importance of the service compared to the competitors, and the European Commission last month announced that the first list of gatekeepers, six tech companies that are subject to the tough new rule, including Apple, Microsoft, Google, or Alphabet, Amazon, and Meta. So Apple and Microsoft argued that iMessage, Bing, Edge, and Microsoft advertising should not be qualified as gatekeepers. And again, right, Big tech gets sued. Big tech continues to rally. I've seen nothing but bullish behavior in the current situation on big tech as it stands. Meta, right? The sideways rotation movement while the whole market was down just held its ground, got a aggressive little pop just now over the last few days. So the bullishness in these big tech names is really out there, right? Like I've been talking about for weeks now, the valuations in big tech are very attractive. So these like even slight little baby pullbacks are going to get picked up aggressively, and even if they get sued, right? Amazon recently, it's shaping up bottom into these low 120s. I think this is a viable dip, or at least a start of a viable dip, to see if they actually rug pull tech. And I'm starting to think that that expected rug pull in tech is something of the past. So I'm a fan, right? I'm a fan to see how this goes because Apple surging, right, back well above that 170. There's no real acceptance under the 170. And a lot of people are looking at this thinking, oh, you wait, just you wait. But I got to tell you, valuations are looking nice. People are continuously buying, right? Things are getting oversold on the breadth capacity, suggesting that we're going to see a turnaround into the end of the year. I'm pretty bullish into about Q2 2024, so it gives us a few months to see how this upside holds up. Now, let me move this on the other side. As we talk about the S&P 5, oh, my hair is crazy. Nice. So as we talk about the S&P 500 futures here today, the trade plan. Yesterday we were bullish. Today I'm starting off a slight bit bearish. I think there's too much volume built up at this top, and yesterday's weak volume rally is going to get explored to the downside, clean up some of the auction, and then pull back up. I think that into like high 70s, they're probably going to try and sell this and hold some kind of an offer. Other than that, right, I'd be targeting down into mid 50s, mid 40s, and then mid 30s to see if they can hold that bid. I think around the mid 40s, right, high 40s, they try to hold a bid based on where the single print opens up from yesterday's session. We clean the auction up and then we start rallying into the end of the day. I'm looking to see if they start selling off the open, right? I want to keep that in mind as we start this session off, right? So that's my plan today. Today, at 3 p.m., right? I'll put the link in the bio right after this live is over. But today at 3 p.m., what we're going to be doing is breaking down a full presentation on how you can use order flow to your advantage to actually find market directionality and strength in moves, right? So we're going to be breaking down a lot of secrets on the order flow front, how to find key levels just based on order flow, how to know where buyers and sellers have been accumulating from the past so you can have a very strong area, how to actually find direction and movement based on order flow and other factors in the market. So all of this is going to be broken down from a futures perspective with a lot of examples today at 3 p.m. Eastern time. So check the link in the bio and I'll see you guys there. Otherwise, check out our website for our free futures course. And I hope you guys have an amazing day, right? We'll be back doing this tonight. So I'll see you there and tomorrow. So thanks, guys, and we'll chat soon.